Okay, well, since you brought it up, do you want to speak just more generally about this whole concept of a CBDC?
Well, I think that's the risk. I mean,
Mm-hmm.
most central banks today are innovating with central bank digital currencies. These are not cryptocurrencies. This is very different than open source cryptocurrencies like Bitcoin. These will be owned and controlled by central banks. So the risk is what we just talked about with, if there's a central bank digital currency that's being exported to the rest of the world and it's controlled by one of our adversaries, what types of national security risks does that pose for us? I think it's quite significant. And I think this is one of the biggest issues our national security community should be focused on.
Well, I like the distinction you made, Perianne, like just from a technical standpoint, to say that these CBDCs are not really, they're not cryptocurrency. They're not a decentralized platform using the community consensus in terms of validating transactions. It's
right.
In other words, it's not like if some people don't like you, they can just make you not have access to your Bitcoins. Like that you can't do that. And that's like the whole point, that the purpose of Bitcoin was to be this peer-to-peer mechanism that doesn't rely on a third party, either their competence or, their benevolence.
It's permissionless.
Yep. So
it's the concept of everyone should have the ability to have access to an economic and a financial system where they're equal. Everyone should have equal access.
What about, I know your organization's discussed this concept of self-hosted wallets. Do you want to maybe talk a bit about that?
And that's such a critical part of the functioning of a digital asset ecosystem. So you can think of a self-hosted wallet, sometimes we use the term unhosted wallet, as kind of the equivalent of your leather billfold on the blockchain. So we all have our own physical wallets and you can put cash in it. We have self-hosted wallets or unhosted wallets that we use for our digital currency or our digital money. There's several attempts to restrict our ability to be able to use self-hosted wallets. And this would take away a fundamental feature of how blockchains and cryptocurrencies work. And we should denounce these types of efforts. Right now, there's an effort from the Securities and Exchange Commission to consider a self-hosted wallet, like a software company, a broker, under SEC regulation. So that's one way they're trying to make it virtually impossible to operate your own wallet. There's been efforts by the Treasury to put compliance obligations on a self-hosted wallet. As we're moving from the analog world to the digital world, our right to privacy shouldn't be removed or taken from us just because we're going from one medium to the next. That's why self-hosted wallets and being able to have access to a self-hosted wallet is absolutely critical. And we should all recognize that it's something we are in a fight for today with policymakers and regulators. And everybody should make their voice heard on that we have a right to privacy. We have a right to use open source technology, and that shouldn't be taken from us just because we're moving things on chain.
Mm-hmm. So maybe to circle back a little bit to some of your previous remarks, how do you feel, is there going to be sort of a pressure that whatever the regulators in DC may have wanted to do on their own, but just the fact that they can see that U.S. competitiveness is suffering because of this, is that perhaps going to be something that's going to steer them such that they're going to have to, stop standing in the way of these innovations?
Yeah, U.S. competitiveness is, a great talking point with policymakers, less so the regulators, but the higher level policymakers for sure. I think being able to make the national security case for blockchain development, most people, all politicians, regardless on what, aisle you sit on or where you sit on the political aisle, do want to protect the nation's national security. So we have found a lot of alignment there. U.S. competitiveness is important. There's a lot of members of Congress that we've met with who are not happy that there's businesses that have shut their doors and have moved to other nations because we can't figure out how to regulate these types of businesses here in the United States. We're extremely hostile towards them. So a lot of, particularly members of Congress, very much want the United States to lead. They want their constituents and their districts to be able to lead in technical innovation, have these jobs here in the U.S. And that's definitely a great point, is the U.S. competitiveness of this ecosystem.
We've been talking a lot about Bitcoin, and I know that's how I first got into this stuff and seeing you at those early conferences. But at this point, I mean, here at Infineo, we speak of blockchain technology, and then we're saying that, what we're doing is putting life insurance on the blockchain, that we're not directly using a cryptocurrency like Bitcoin or so forth. Can you maybe speak a bit to that? Like that this is more than simply just for the listeners. We're not merely talking about people who might want to do financial transactions denominated in Bitcoin. Like this is much more than merely that.
Right. Well, I mean, Bitcoin was the original technology, right? That's how we solved the double spend problem. That is the peer-to-peer electronic cash system. So it all stemmed and was inspired by Bitcoin, and Bitcoin's one type of digital asset. But with this technology of blockchain, I believe that all assets will be tokenized and represented on chain. So you can have a native on-chain asset like Bitcoin, and there's millions of Americans and people around the world that have decided to own Bitcoin today, but you can also have other assets represented on chain. So you have like a digital twin. You have your real world item, which could be life insurance. It could be the title to your house. It could be your birth certificate, your death certificate. It could be gold. So you have these real world assets, and you have a digital twin that's represented on the blockchain. And once you put assets on chain, it creates new opportunities for different types of markets, ability to trade, add smart contracts. One area that we're looking at in depth right now is in the non-fungible token space, NFTs. And one of the things that I find really promising about that is rights for artists and creators. Today, if you paint a picture and you sell it, you make money off of that. But what about when it gets sold again or again and again? And oftentimes, it's not the first sale that's the highest number.
Right,
it's those sales afterwards. The artist usually isn't compensated for those secondary transactions. Well, if that painting has a digital twin on a blockchain, you can build in royalties with smart contracts that say every single time this is sold. And you sold the physical painting, but the token also has to be sent as well. There can be a piece of royalty that goes to the creator. So this will have tremendous applications for many different industries, whether that's artists, musicians, other types of creators, just supply chain, and other types of assets. I believe all things will be represented and traded on a blockchain is going to create more safe and efficient markets for many different industries.
Yeah, this is real exciting. I'm glad you. So I've just noticed, like coming from my libertarian roots, a lot of things that 20 years ago we would write about as free market economists, just sort of daydreaming about. Well, in principle, these sorts of things could happen, but it was difficult to implement practically. Whereas now, like you say, with smart contracts, the ability to post you want to do some arrangement with somebody, but I don't trust them, and especially if they're in a different jurisdiction, and so it's not even like the state could come in and do anything. But you can kind of lock some stablecoins up somewhere, and then if they do their end of the bargain, then it gets released and they get paid. So both parties can be confident that one's not going to rip the other person off. Just little things like that, where it's the ability of smart. Maybe do you want to? I think lots of the listeners already at this point know what it is, but do you want to just explain what you mean by that phrase, smart contract?
I think the easiest way to understand a smart contract is the phrase, if this, then that. So if I get in a car wreck and my insurance company verifies that it's permissible under the agreement, then a claim is paid out. So in the insurance space, that's actually a really promising space for smart contracts, because so much of the administrative cost of insurance companies is just processing claims, is processing paperwork, verifying what's going on. I've seen applications that have to do with weather. So if you're maybe an agriculture company and you have insurance in case of a drought, so you could set it up so there's some type of weather identifier that verifies that there was in fact a drought. It's not a debate. We all use some type of central party that's trusted. So if there is a drought, the claim is paid out. And then you don't have all these people sitting in the middle processing paperwork. You can do it through automated smart contracts. So if this, then that is kind of the phrase we use to explain it, but it will have tremendous applications. And in fact, I mentioned the Chinese CBDC, I've read and I've studied a lot of their patents. They have a patent on their monetary policy. And they have a patent, or at least a patent application, to automate monetary policy. So if inflation comes in at this rate, then change interest rates to this or that. So it's actually really interesting that they have these advanced tools to allow them to maneuver monetary policy metrics based on smart contracts. Instead of having a board sitting in the middle, turning things on and off, it just happens automatically. So everything is done very, very precisely. So smart contracts will be absolutely, a huge part of the digital economy. You're going to change a lot of business functions and have a lot of promise for many different industries.
Yeah, it's really, I think it's the kind of thing where we can't even, just like when Bitcoin first launched and people were trying to figure out, well, how does this work? I think most people would not have looked ahead to see all the applications down the road. And likewise here, like I know you're just scratching the surface and probably, like you said, you could do a whole nother episode just listing all the different ideas that either are being worked on or maybe 5 years from now, people could start doing with this technology. So it's pretty exciting stuff. So I suppose as we wrap up here, what is your vision for do you think the financial sector 5 years from now, people today, it's going to look kind of the same, or do you think we're in store for some very rapid changes?
Yeah, I think it's going to change a lot. And I think blockchain technologies are going to have a big role in that. I think stablecoins are absolutely critical to the goal of strengthening the US dollar. Stablecoins is something, there's legislation pending in Congress right now, a lot of interest in stablecoins. But if you look at many different emerging and developing countries around the world, having access to the US dollar is very much considered a lifeline. And a lot of those people are either unbanked, underbanked, or just really don't have access to financial services, but they have one of these that's connected to the internet. So through some very basic internet applications, you can get US dollars in the hands of different people who didn't have access to it before. That's going to strengthen the US dollar. And I think that's going to be a positive thing. And that's an important role that the blockchain is playing. So I think the financial system is absolutely going to see a lot of changes with stable coins, with the advent of decentralized finance or DeFi, CeFi, integrating DeFi and CeFi, and with cryptocurrencies. Many people are looking to invest in digital gold or some type of store of value, as we're seeing very high inflation rates today globally. And this is going to have implications for that as well. So this is the future of finance for sure.